I've had a feeling that tax refunds were going to be smaller this year than in previous years. Early data is suggesting that's the case. Why? And what do you need to know? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so have you done your taxes yet? Did you like the result? The big idea, okay, with financial planning is there's tax preparation and there's tax planning. Now, those are connected, but those are two different things. Tax preparation is getting your actual taxes done. Okay, it's compliance. You're required to do that. It's finding out what happened last year and getting the right numbers in the right box and just seeing what the result is. Preparation, tax preparation. We all need to do that. It's tax season right now. Tax planning, though, is not required. Tax planning, though, is where you actually look at what opportunities exist for you to improve your tax situation. So it's not reactive, it's proactive. What could you be doing differently to mean that you pay less taxes either this year or over your lifetime and make your overall tax situation better? So for tax planning, I often say simplifying it, you try to avoid surprises. No one likes tax surprises. And capture opportunities, identify and capture opportunities. We love tax planning. Now we provide tax preparation as well, that service, and you need that service as well, whether you're doing it on your own or have a CPA doing it. But that's the difference between tax preparation and tax planning. Now, because we do tax planning, we've had an early jump because we've been doing it all of last year, projecting what things would look like when people filed their taxes right now. And we've seen that, yeah, refunds are likely going to be a little bit lower, right? And sure enough, early data from the IRS confirms that exact thing, that refunds are down about 11% compared to last year. The average refund is still a nice refund, just under $2,000, but the year before, it was over $2,000. And let's not forget, that's after some tax credits and stimulus was already paid out in advance. You still got a tax, the average tax refund was over $2,000 last year, and it's under $2,000 this year. No big surprises if you've been doing tax planning. So hopefully, if you've been doing tax planning, you avoided this surprise, right? But what are the circumstances? Why? Is it just people had less withheld? Did some rules change? Why are refunds less this year? For the most part, it all comes down to tax credits, right? And if you're just a single individual with no kids and you've just got one job, W-2, maybe you're a teacher, your taxes and therefore the tax withholding is not going to be that complicated. The payroll, the withholding system is set up so that you should end up on the refund side, but not by a lot. Because in your situation, no kids, not married, just one income source, you basically your tax situation's pretty simple. There's not a lot of tax credits. You get one standard deduction. That's it, right? And so your situation's going to be plain vanilla, not very complicated from a tax standpoint. But when you get married or when you have kids, all of a sudden there's a lot of other tax credits that you could get, and those changed significantly. Let's just say they changed significantly in 2021, and they're back to how they used to work in 2022, and that's meant a big change with refunds. First, the child tax credit. The child tax credit way back when was $1,000. It's now $2,000. But for 2021 only, they were trying to extend this. I thought they were going to get it done, but they didn't. Instead of a $2,000 child tax credit, it went to $3,000. But if your child was younger than age 6, then it was $3,600. That's an enormous change, going from a $2,000 tax credit to $3,600. That's a big deal, okay? Further, and I know this is sort of nuanced, but that child tax credit, any child up until the year that they turn 17, you're eligible for that child tax credit. Why what happens at 17 where they're all of a sudden no longer a child? They're still your dependent. Why at age 17 does that go away? Not age 18, not including age 17. It's the year they turn 17, that child tax credit goes away and it drops to a $500 dependent credit, right? But for last year, for 2021 only, that $3,000 child tax credit included 17-year-olds. So for 1 year only, they actually made it make a little more sense. Well, that's all changed for 2022. It reverted back to the old way that it worked. And some of you listening to this say, well, didn't they pay the child tax credit out in advance as well? I know, I understood, absolutely. However, still a meaningful change in the amount of tax refund. And if you didn't receive the child tax credit in advance, then you would have received it in a refund on your return. That's going to create a stark contrast between last year's return and the one you're filing right now. And then the other big credit for those of you that have kids that was different in 2021 that reverted back to the old rules in 2022 says child independent care credit. Our youngest, we dropped off at preschool daycare this morning, and it's obviously costing a large amount, and you get a tax credit on your tax return for those qualifying child care expenses. Well, in 2021, there was an enormous boost to this credit. What was it? Up to $8,000 per child of qualifying care was allowable to count towards that credit. And if you have more than one child in child care, then up to $16,000 total, $8,000 for each kid. The tax credit then increased to up to 50% of that. So for some people, if your income was below certain thresholds, and it wasn't an enormous threshold, but it wasn't a minuscule one either, where no one would really qualify. So you could get an $8,000 tax credit for 2021 for child independent care dependent care costs, all right? For 2022, that credit reverts back to the way it worked before, which instead of counting $8,000 per child, only $3,000 of expenses count. And the maximum tax credit is around 35%, reducing the potential tax credit significantly if you were, because this was my argument with childcare when they changed these expenses or this tax credit. No one's paying just $3,000 for childcare over a year. You've got to work outside or you've got to have a full-time job, both you and your spouse, blah, blah, blah. There's certain qualifications in order to even get this tax credit. And if you meet those qualifications, then you're paying an arm and a leg for childcare. You just are. So having the countable expenses cap out at $3,000, it just doesn't make sense. It's not keeping up with the times. And so when they switched to $8,000, I thought, well, that's more like it. That's more consistent with what actual prices are out there. People pay a lot more than that. So now when it dropped back down to that $3,000 threshold, it's changing people's refunds significantly. And then the final reason, and this one's more of a rounding error, it's a smaller issue, but the final reason why tax refunds are a little bit less this year than they've been in the past is for the past 2 years, we've had this uniform charitable deduction. Okay, it was $300 back in 2020. It was $600, up to $600 in 2021 for your taxes that you file in the spring of 22. Now, is that changing your tax picture a ton? No, but it could change it by a couple $100. It could increase your refund by $100, maybe a couple $100. And again, that's about the margin of difference that we're seeing here between what previous tax refunds were and the lower amount that they're coming in at this year. So we've been seeing this from our tax planning and tax projection work all last year, that we expected that tax refunds would be a little bit lower this year. What's your experience? But more importantly, are you doing tax planning? Are you caught off guard by what your either refund is or whether you owe? Is that a surprise? You want to avoid that through tax planning, but are you also capturing all tax opportunities to reduce your tax bill either today, this year, or over your entire lifetime? Tax planning is what you need. Tax preparation is what's required. Are you getting that tax planning, and is it connected to your entire financial plan? If not, work with your CFP on that. If you don't have a CFP on your team, contact one on my team. You can find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.